So, question, how are your student loans tied back to your mortgage? I'm Jody Roscoe with the Roscoe Group, and I'm here with Ali Ault with Platinum Credit Now. Let's talk about student loans and how they affect getting qualified for a house.
Yeah. So student loans
I know.
can have
It's a problem.
It is a problem.
Yeah.
It is a problem. So oftentimes I'll get people who come to me who have scores in the 500s, and if you look at their credit report, there's nothing wrong with it other than these student loans, and
they can be so big, so much money.
So much money.
So much money.
So it affects your debt to income ratios when buying a house, obviously. Yeah. I can't help you with that part, unfortunately. But what I can help you with is how to set the stage for that. Number one, for your kids, if your kids are going to college now, so we can talk about that. But also if you are a student and you have that college debt, we'll kind of talk about both of those.
Perfect.
Sound good?
Yes.
Okay.
Let's do it.
Let's start with if your kid has your children have student loans. So if your children have student loans and they're in school currently, their loans are going to be deferred, right? Right now we're in a government forbearance. So some of what I'm going to say to you is not necessarily true. But generally when we're not in a government forbearance with a 0% interest rate right now. Nice.
So government forbearance, they're not actually accruing interest right now.
They're not accruing interest.
Okay, well that's nice, but okay.
But that doesn't
still
mean
going to
the
owe
balance
it.
is going down. They're still going to owe it.
Yeah.
So during this government forbearance, I do suggest that a payment's made, even if it's $5. You know, it's an interest-free period, so if you could pay as much as you can down, you're winning right now, right?
Yeah.
But if you're having a hard time, $5, create some activity on that account, okay? And I'll talk about that a little bit more in a second. But if you do have students who have student loan debt, especially when we're not in the government forbearance, it is super important that they find out what their interest is per month.
Okay.
Or daily, however you want to figure it, and make sure you're paying that each month, or what that
at
interest
least
is.
The interest. Yeah.
Like make it a birthday present, Christmas present, right? It's probably small in the beginning, but student loans have compounding interest. So during that time that is deferred, they have that interest rate, and now they're paying interest on their interest, and it just grows and grows and grows. So by the time they're out of school, they owe so much more than they actually borrowed.
Yeah.
I get a lot of people call me and they go,
how could I owe this much?
Yeah, I didn't get that much out.
Yeah, I did not borrow this much.
Yeah, so it's definitely would be beneficial for your children if you get them to pay at least the interest each month. And then of course right now with the government forbearance, pay $5. It does two things for you. Number one, it financially is better for you, right? Number two, when we pay a payment, we're creating activity on the credit report. What a lot of people don't know is you can have a student loan on there. Let's say you got it out in 2009, but you haven't made a payment on it because you're deferred or whatever.
Yeah.
That's a long time to be deferred, so that wasn't a good example, but
we get it.
You have this long history of this student loan, but you haven't made a payment, so it's what we call an inactive account. So it's not helping your credit. But as soon as you make a payment, even if it's a $5 payment, you now have activity, and you get that activity actually from the start that it was open, as if you've been paying it all that time.
Oh my gosh.
Yeah. So I had a client.
Because it's not actually in default or anything. It's just deferred.
Yeah.
And so
we're talking about, good standing accounts at this point. And I had a client that did everything I asked him to do through the credit counseling process so he could buy a house, but he would not pay on his student loans because he really thought that if he paid on a deferred student loan, it started the repayment process back.
Okay.
No matter how many times I told him that.
So it doesn't?
It doesn't. No,
okay.
It's a voluntary payment.
Okay.
So he finally listened to me because he came to me. He's like, I did everything that you said, Ali. My mortgage lender pulled my credit report, and I still don't have enough points. I need 20 points, it was something small. He really didn't need even 20 points. It was a really small amount. And I said, well, you did everything I said, but you refused to pay a payment on your student loan. I just want you to pay $10 on it. So he did it. 40 points.
Wow.
For $10.
This is why you hire Ali, because she knows what to do.
That's not bad.
Yeah.
So I highly recommend that. So if you're starting out and you're just getting loans, pay the interest each month at least. Pay the interest plus 5, right? Pay that down. But then, and the interest is not going to be a lot. That's the nice thing. We're not talking about a big amount. Later on, it will be a lot if you don't do that.
It is crazy how that compounds into a huge amount of money, paying interest on interest. That is crazy.
It is crazy.
Yeah.
Yeah. Too bad our savings accounts didn't work.
Right? Yeah.
Oh, they did they?
Yes, they do that.
They do that.
Compound that the other way.
That's the 7-year rule, right? Yeah.
Right.
So same thing with the student loans, unfortunately, is their compounding interest. The other thing that I see often, and this is usually like that client that I began talking about, that 500 score client, but their credit looks great. If you look at the credit report, you'll see the loan amount. So that's in the loan section, and then you'll see the balance. So the high credit section is your loan amount, how much you got. So I got $30,000 out. My balance is $35,000. I owe $5,000 more than the loan amount I got. So the credit bureaus go, ding, 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 red flag. Financially, this person is not doing well because they owe more than they actually received. And as we all know, most people defer their student loans. So they didn't do it on purpose. It's not really that they may not have been financially able to pay that. They just didn't because they didn't think they had to. So why? Why if you don't have to, right? And so then we have this big gap. So we'll have people who come to me that are $20,000, $30,000 over that original loan amount. So what we do is we combine them all, consolidate them to a brand new loan.
Okay.
So that way what happens is we paid off all these loans. Now we have a brand new loan.
Big loan.
But our balance and our loan amount are the same. And as soon as we make a payment, so once we consolidate, I'll have someone make, let's say a $10 payment. Now our balance is below our loan amount.
Okay.
We jump the score.
Got it.
Significantly.
So the key there is to pay off the interest at least, so you aren't compounding that.
So you don't have to consolidate.
So you don't have to consolidate it later and whatever. And it doesn't create a much bigger bill for you. Right. Okay. I have people that say to me, well, I do have student loans, but my parents are paying them. I took them out, but my parents, that's how we got, to pay college. My parents are paying them.
Yeah.
But they don't see it like
No.
that. Right?
No.
Yeah. So they're always like, well, I mean, I'm not even paying that bill. Why doesn't it, but it doesn't work like that, right?
Right. Parent Plus loans, it's still going to be on the student's credit report.
Yep.
So if you're the student in that situation, you want to take these tips that we're talking about now for yourself. But if you're the parent on the other side, take these steps for your child.
Right.
Or have them do it because it's going to affect your credit like it's yours by yourself, even though you thought you did something great to do this Parent Plus loan for your student. You also, as a Parent Plus loan, you do not have the same benefits and rights as a student loan has. So that's another issue. You can't just consolidate them.
Okay.
Yeah, things like that. There's some more rules. That's not my specialty in getting into the fine tunings of that, but as far as how those student loans impact your credit report, that's how I come in.
So the student loan then would impact both the parent's credit loan or credit and the student's credit. Yeah.
And then I'll have parents go, well, I told them to start paying.
Yeah.
I just had a conversation recently that was exactly that. And the daughter refused, right? And so what I always tell parents is if you're going to do something, do it with the intention that you're going to pay it. Because you might have to. Yeah. So that goes with any cosign stuff.
Right. Yep. All right. Thanks, Ali.
Thank
I really
you so
appreciate
much.
it. If you like this video, thumbs up, subscribe. Yeah, subscribe. All right. Thanks so much.
Have
a good day.
Bye-bye.